Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Well, hello and welcome to this Motor Trade Radio weekday special. Philip Nothard's actually on holiday this week, but we're delighted to welcome back to the podcast Derren Martin, Director of Valuations at CAP HPI, joining us for an update on how trade values performed over the course of June, as well as an overview of the first half of the year. So welcome back to the show, Derren. Just the two of us this month, but still plenty to talk about.
Yeah, thanks, Curtis. Plenty going on. So lots to cover again with obviously all the different things that happen within the CAP Live arena during June, with the fuel type, obviously one of the most interesting areas again.
Yeah, in fact, that's become a regular of our chats, hasn't it, fuel type? So we will be talking about that as part of this podcast. But before we go any further, you've closed the book on June. So can you talk us through the headline 3-year 60,000 mile figure for the month? And what drove the month? What drove the drop? Because it's the third consecutive drop now, isn't it?
Yeah, so we've had a 1.4% drop this month. So for those live subscribers, they've obviously been seeing that as we go through the month. But that's what, for monthly values for July, that's what's happened. So 1.4%, which is equivalent to about £270. It's fairly normal for the time of year, I would say. Previous years we've had drops of, I think the highest was a 2.1% drop in 2019 and a 0.6% drop in 2018. But in June, generally, values do tend to drop. It's sort of the start of holiday season, but also I think it's really important to remember that values do deflate. So you do tend to get drops. We've had some very unusual times for the last 3 years where values have gone up. But this is a fairly normal thing to happen. Vehicles age and their life cycle values go down as more stock comes into the market as well. So it's a 1.4% drop. That obviously doesn't tell the whole story. And I think Phil is always saying the devil's in the detail, and we're keen to sort of stress that as well. So older cars have gone down by more, 2.6%. There's a little bit of a pushback on some of those values. Younger cars at the 1 year point have gone 1.3%. So that's the headline figures.
And I mean, it's interesting what you say there, and very much a caveat about prices coming down, because deflation is the norm. And I noticed within your editorial, you actually say prices are actually still 30% ahead of where they were at the start of 2021. So it's worth remembering that, isn't it, every time we talk about a drop?
Yeah, and what we're seeing is just normal drops. So we're 30% higher and we're getting normal drops. So we're not eating into any of what happened and over that sort of course of 2021, and also last year was strong as well. So yeah, it's all just very normal, really. We've spoken to a lot of the dealers again this month, and I'd say it's fairly mixed. So it's certainly not on fire, the market. May was difficult because of bank holidays and a half term. You then come into June. I think some dealers were hoping it would pick up. It has done for some. It hasn't for others. Nobody is sort of saying it's terrible. It's just about okay. We've obviously had some really good weather as well in June, which can stop people from going out and buying cars. They're focusing on other things. We're getting into holiday periods and all those sorts of things. So I actually think this 1.4% drop is just a sign of a sort of a seasonal market, really. And I think the average over the pre-COVID years was a 1.2% drop. So we're just slightly worse off than that. But this is nothing unusual to have a 1.4% drop in the month of June.
And as it is June, you've closed the book on June. What's your take on where we are with values at the midpoint of the year now?
Well, so it's been a sort of a tale of two halves, I guess, for the first half of the year. The first 3 months, values went up every month, and that's the first time we've ever reported on that occurrence in the first quarter. So each month there was a small increase, and then for the next 3 months we've had decreases. But overall, when you take a plate uplift in March into account as well, values, so a 3-year-old car is actually worth more than the equivalent 3-year-old car was at the start of the year. So it's about just under 0.5% up. So, and that's a strong year. Usually values have deflated by now, and you would be looking to at the end of the year to be a sort of between a 3 and a 5% drop. But at the moment we are up, so it's looking like it's going to be a strong year. Obviously, with the caveat of what's going to happen in the second half of the year.
And looking at vehicle sectors and how they performed over the course of June, they all pretty much tracked that overall average drop of 1.4%, apart from city cars. So what happened to them in June? What influenced what was going on within city cars?
Yeah, city cars do stand out as being the weakest sector in percentage terms. They had a reduction of 3.5%, which is equivalent to just under £300, which is not insignificant for sort of small price point cars. But you have to realise with city cars that they've actually been the strongest sector over the last 12 months. So you've got to take that into account. They were actually in a state of inflation by 6% to the start of June. So it looks now like they've peaked, and they're now starting to come down. But they're still in a state of inflation if you look at over the last 12 months. So it's been it's just been a bit of a realignment, I would say. We've had some sort of notable movers in that sector. Fiat Panda's dropped by 7%, which is £875 at 1 year old and £550 at 3 years old. So there's no shortage of those in the market, and they went up over that previous period. So other cars like the Peugeot 108, the Skoda Citigo, Renault Twingo, they've all dropped by more than the average as well, which is generally around 4 or 5%, which is equivalent to £250 at 3 years old, roughly. So you are starting to see a realignment in those city cars, whereas other mainstream sectors have, like you said, have been sort of seen those average drops. Lower mediums dropped by 1.7%, which is about £240. Super minis have dropped by 1.8%, which is about £175, and SUVs by 1.4%, which is £320 on average. So it's generally been very consistent, apart from those city cars that have dropped by slightly more. But again, nothing to concern anybody about, because they're still up year on year.
Yeah, because as you pointed out, that they've been performing particularly strongly, haven't they, over the course of certainly this year.
Yeah, well, there's less of them around now because they're not really made in the new car market so much. Manufacturers have moved away from producing city cars, so there's less of them around. So it's they're a good used car purchase, and obviously you can get a couple of city cars for your forecourt as opposed to one SUV. So with profit opportunities there. So yeah, they remain in demand. They're just undergoing a little bit of a realignment.
You're listening to all the chatter that matters on this special weekday Motor Trade Radio podcast, powered by eBay Motors Group.
Now, Derren, turning to fuel, petrol and diesel tracked the overall market average in terms of the way they perform, but there were more downward alignments for EVs, which we've talked about over the last few months, but also some notable trends for plug-in hybrids and pure hybrids. So what's happening in the alternative fuel vehicle sector at the moment?
Yeah, as I said at the start, it's been really interesting again for EVs, and also now for the hybrids as well. But yeah, so EVs have dropped by 1.9%, which at the 1 year point is equivalent to just over £600, and £260 at the 3 year point. And it's the 9th consecutive month of drops for EVs at both of those age points, which is a cumulative decline of almost 40% over that period. So, and in comparison, petrol cars have just dropped by 3.5% over that period. That's their cumulative drop. So, so it is another negative month for EVs, but it is encouraging that it's far less than last month's and far less than the month before that. So each month now we're seeing less of a drop on EVs, and it's not a million miles away from the average. There's still lots of moving parts within that. You've got cars, some EV models that have dropped by sort of 8%. Honda E has dropped by 8%, Seat Me by 9%, Renault Zoe by 5%. But then we have now started to see a bit of an uptick for some models. I think the Model 3 performed okay in May and has done that in June. So that's gone up by 4% at the 1 year age point. So that's that's now looking reasonably priced. And when you're starting to see cars retailed in the 20,000s for a Tesla, that's a bit of a, well, they're good cars to stock now. So it seems as though it's had its pain and now it's started to move back up again. It won't move up by as much as it moved down by any stretch of the imagination, but it's certainly doing okay now. And other Teslas have performed quite well as well. The Model S has increased by 4%, and the Model X by 3%, which is over £2,000 for both of those. So those two models are probably benefiting from right-hand drive variants not being able to order as a new car. So if you want one of those vehicles, you've got to go into the used market or get a left-hand drive, which again, you've got long lead times and probably not very appealing to get a left-hand drive. So that's what has sort of pushed those back up. But the Model Y's moved back down again. So you've got lots of differences in that EV market, as I've kind of shown there. You've got some that have dropped considerably again, some that have gone back up. So that's EV. And then you're now looking at drops for pure hybrids and plug-in hybrids. They've seen the heaviest drop of all fuel types in June. So maybe they just look a little bit expensive now compared to some of those EVs, because they haven't dropped anywhere near as much over that same period of time. So you've got so hybrids that have only dropped by about 3 or 4% over the last year, whereas EVs have dropped by over 30%, so 30 to 40%. So they're now wider apart, and you're probably going to get some more realignment in those hybrids.
Because the pricing for hybrids and plug-in hybrids, it's got to be pitched closer to EVs, hasn't it, in the used market?
It's got to be relative to petrol, and it's got to be relative to EVs. So it's just one of those things that everything has to find its place in the market. Everything has to kind of realign. So there's just lots of differences there that within the hybrid market of vehicles that will probably have to move by a little bit. We've had Toyota CHR, a really popular car, but that's dropped by 4% this month. You've got the Volkswagen Golf that's dropped by 8%. So and you also got some Land Rover product that has hybrids that have dropped as well. So everything kind of is just realigning in the market. And with EVs going so much over such a short period of time, you are going to get some of the others that have to realign around them.
And really, same question for petrol and diesel. Any winners and losers that stood out for you this month?
Looking at petrol and diesel, so you've got, mainly the drops are again hybrids and electrics, but you have got, so Mercedes-Benz AMG GLA class dropped by sort of significant amount at 3 year point. Renault Scenic dropped by 7%. So you have got some drops there. On the other side of that, sort of increases, Mitsubishi Mirage went up by 5%. Some convertibles have gone up. BMW M4 convertible gone up by 5%. A little bit mixed really there, I guess, with those cars that go up. You will always get differences in the market with vehicles that do go up in a falling month, just because of supply and demand dynamics. Toyota Corolla's gone up by 4%. So it just depends how many of them are coming back into the market, whether dealers are happy to stock them, all of these sorts of things that just go into the pot really, and make it so interesting, so fascinating really, when in a falling market, only a slightly falling market, you can have some cars that still go up by 3 or 4%.
And you mentioned earlier about dealer confidence, the sort of mood in the dealer sector. And I know you poll them every month. So what have dealers been telling you about stock levels and customer demand over the course of June?
I think stock levels are okay. They are. There's plenty of vehicles out for them to buy, particularly if they're interested in cars in good condition. There's been more cars coming back into the market this month from fleet and leasing sources, so they're good prime stock. They do tend to be a bit older than 3 years now, just because of shortages in the from sort of COVID and vehicles being extended. So there's stock levels okay, plenty of vehicles out there to buy, but not an oversupply. We're still some 15% below pre-COVID times with regards to used car volumes. Customer demand in June, as I say, been really mixed. I think for dealers, it's been a relatively good month, better than May. For others, I think it's continued similarly to May. No one's saying it's terrible, but it's just been a little bit mixed, and it's certainly not through the roof. But I think, as I said earlier, it's a fairly normal June, especially for a June where we've had really good weather. So it's just about okay, I would say. Not pulling up any trees, but certainly not a disaster.
and I mean, bearing in mind that the new car market has been growing now for, well, it's 10 consecutive months. Is there any noticeable improvement in terms of supply that's coming into the used sector? I mean, you did mention some ex-rental, ex-fleet cars, and that's really where we're seeing the growth in the new car market.
Yeah, well, it's fleet more than rental, really, because I think so. Although rental volumes are going up slightly in the new car market, it's still miles behind where they were supply-wise before COVID. Rental companies wanting to keep the cars at the moment because it's a buoyant time for them for actual rental, so they don't want to sell any additional cars that they've got. Yeah, fleet and leasing, more vehicles coming back in. Volumes are ahead of last year, but behind pre-COVID, both by about 15% actually. So we're just above 15% above where we were last year, and a similar number below pre-COVID times. So yeah, there are cars coming, plenty of cars out there, but the good quality ones, the best condition ones, are still making reasonable money. Dealers aren't particularly keen to buy cars that are going to sit in their workshop and maybe have a bit of a book drop whilst they're in there. So it's those good quality cars that certainly those fleet ones that are doing well, and that's probably why some of the older cars have dropped in value by more this month, because the cars in a poorer condition, the sort of grades 3 and 4 going through the auctions, are not quite as sought after as some of the better quality cars.
And finally, Derren, what are your expectations for values and demand over the coming weeks, as certainly as buyers' attentions and budgets start to shift towards holidays and we move into Q3s? Can we expect more of the same?
I think we can, yeah. I think we're not going to see massive drops in values, but we will probably see some normal seasonality. So as I said, we're at a higher level for values. They probably will come down. I wouldn't be surprised to see a similar drop during July, similar to what happened during June. So I think we'll see some small downward movements again, maybe somewhere between 1% and 2%. I wouldn't be at all surprised. Even if it was slightly more than that, we're still hardly eating into that those increases. But that would be my suggestion, probably, that it will be somewhere between 1% or 2%. And yeah, holidays will have a bit of an impact, but it's kind of, as we move through, there won't be loads and loads of cars coming back, because it's sort of all eyes on September then, really, for getting new car registrations in and cars returning. So for Q3, I think we'll see some small drops, but it will be relatively stable, a bit like we've seen over the last quarter.
Yeah, well, look, do come back and tell us how the market performs next month. So many thanks for joining us, Derren. Really appreciate your time on this. And anyone wanting to see the full editorial can head over to the CAP HPI website, which is cap-hpi.com, where it can be downloaded. But thank you very much, Derren. That's all for now. I'm back with the headlines on Motor Trade Radio this weekend. Until then, it's goodbye from us, and many thanks for tuning in.
Thank you for listening to this special weekday Motor Trade Radio podcast. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday, live, on demand, wherever you are, on your podcast feed. In the meantime, if you'd like to get in touch with Philip and Curtis, maybe be on a show or send a press release, then email them at motortraderadio@yahoo.com. You can also join the Motor Trade Radio LinkedIn and Facebook groups, or follow the podcast on Twitter. You've been listening to the Motor Trade Radio podcast, bringing you all the chatter that matters.